Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is we get everything you need to know, and 96 at 9 o'clock, with news we're now in the final 2 weeks of the northern holiday season, and that is anchored by the central bank shindig at Jackson Hole, Wyoming, starting at the end of the week. But first up today, more evidence that foreign direct investment has stalled into China. We marvelled at the stall in both May and June, and it has extended into July, although it now is a positive 40 billion yuan. The net inflows are still very small for a country as large as China. In July 2023, the net inflow was 140 billion yuan, so in July 2024 that's down 70% from then. China's been masking the stall by only referring to the year-to-date results rather than the monthly outcome. But even that approach will catch up with them soon. Year-to-date 2024 is down 50% on year-to-date 2023, and that is massive. Meanwhile, Taiwan reported its second quarter GDP expansion of 5.1%. That was down from 6.6% in the first quarter. Beijing is probably looking on in jealousy. In Japan, profits topped analyst forecasts for 70% of Japanese companies in the April to June quarter, led by vehicle and artificial intelligence fields. Many are benefiting from the tailwind of the weak yen. In India, 19 out of 38 states are running 3% to GDP deficits or more in their bid to shine economically, and that is raising the national public debt sharply. Delhi is concerned and is tightening up on what is permissible. And the central government is having to restrain itself to cover aggressive state deficit spending. The catch-up in their infrastructure deficit is essentially what is driving the pressure. In the US, the University of Michigan Consumer Sentiment Survey rose more than expected, with its first increase in 5 months. The Expectations Index improved to its highest in 4 months, while both the year-ahead and 5-year-ahead inflation expectations were unchanged at 2.9% and 3% respectively. And the EU said its trade surplus is rising, but that is because imports are falling faster, down 8.6%, than their exports, down 6.1%. The US Treasury 10-year yield is now at 3.88% and down 1 basis point from Saturday and down 5 basis points in the week. And the price of gold will start today up $1 at just on $2,508 an ounce, a new all-time record high. A week ago, this price was $2,427 an ounce, so it's a 3.3% rise since then. And oil prices are unchanged at just on $75.50 a barrel in the US, while the international Brent price is just on $79 a barrel, unchanged in a week too. And the Kiwi dollar starts today unchanged from Saturday, still at 60.5 US cents. A week ago, that's pre the OCR cut, it was at 60 US cents, so a 0.5 cent gain since then. Against the Aussie was still at 90.8 Australian cents, against the euro was still at 54.9 euro cents. That all means our trade weighted index starts today at 68.8 and unchanged from Saturday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.